morning, traders. Today is Friday, February 3rd. Markets have been closed for a while now. We've had a wild week, haven't we? FOMC, crazy town on Wednesday, and then it ended up on a Friday with preceded by Apple's earnings and then the crazy non-farm payrolls numbers that just seemed like it was going to rock the markets, yet the markets rallied in the morning and then dumped it all back in the afternoon. So we're going to get into all that. But this episode, I've got a lot of good information. We are going to kind of start off at the weekly charts and discuss kind of where we're at a macro level. And then I'm going to get into some uh, proposals that I think the markets could pull back to next week. Okay. Then we're going to get into SPY futures, do a 1 hour MACD review of the MACD of the possible bottoming points where the MACD could bottom. And I'm going to show you we still haven't gotten there. We've still got more downside to go. Okay. And then I'm going to show you do some 1 hour MACD comparisons of SPY itself that has happened this week. And then you're going to see firsthand what some pre-market and extended hours wicks are already telling you about what's coming next week. Okay. And then finally, we're going to get into some intraday. First, I'll start off with some broad strokes, some themes that happened today. Then we'll get into the intraday tweets. So lots of good information to come. But what you're looking at here is the 65-minute chart. That line right there is your lower high. That's it. That's your lower high. That was the first telltale sign that there might be a problem coming. Okay, because all this week, higher highs. Okay, that's the first sign. You failed to make a higher high. That's the first sign. Something is going to happen. Okay, all right. So you're looking at the 1 week chart right here. This is the matrix. I haven't shown this slide in a while, but hey, the good news. Look at that. This is SPY. SPY. The weekly MACD has now crossed the 0 line. Yeah, look at that. Last time that happened was February 2022. Okay, so you have that to look forward to. Now, let's look at this closely right here. Let me look over here and zoom in right there. Okay, so where have we come from the last 5 weeks? Up, up, slightly down, up, up. But notice this one has a pretty darn big wick down, whereas these up weeks did not have big wicks down. Okay, so that's the first macro sign that I think we might hit a temporary resistance, didn't we? Yes, we did. Okay, so big wick down. What do you think should happen next week? Even higher? I don't think so. Look at the pattern. Up, up, down, up, up, big wick down. You think it's going to go up? No. It's got to back test. Okay? It just has to. And you'll really see it next in the next slide. Okay? So that's all I wanted to point out about this. That's where we are. I mean, it's been, to just say it quite plainly, it's been a pretty damn good run. I mean, this is the only red week, and that had a huge wick up. I mean, really? So you got to give some of it back. Okay? I mean, that's just natural. This is natural cycle kind of stuff. You can't keep going up. That's just not the way that works. Okay? So, all right. Here is another view. This is the daily view, by the way. Here's the daily view of basically the entire month of January. Right here. That's what you're looking at. Right here. Whole month of January. Okay. I drew a best fit line right down the middle of it. Just call it the regression line if you want to. The mean. right? And here's the top of the channel. Here's the bottom of the channel. So look at how it basically bottom, then it goes to the top, and then it comes back to the bottom, messes around in the middle, and now it goes way above the top. Way above the top. Yesterday. This was yesterday's candle. Should you expect to keep going up? Is that reasonable to expect that? Now you are beyond, well beyond what has happened the entire month. You are well beyond this upper range now. Is it any wonder why you got a big candle wick down today? No, it shouldn't be. You are still on the upper end of this range. You must have a regression to the mean. That's just how statistics works. Okay? You must have a regression to the mean, which this is the mean right here. You must have it. And on top of that, you went to the extreme on this side. You probably need to come back down and fill this side down here. Okay? So, this line connects right to 402, doesn't it? And look at right where the mean is, right at 408. Remember earlier this week, in this week's episode, I said, yeah, 408. That sounds like a reasonable area because that's basically the mean. That's the average. Okay? So, that's why I wanted to show this to you guys, like so you can see for yourself where we are. You know, this is FOMC. I get that. I get what happened here. But this just took it to a whole new level. And you're going to see another slide on that too. Okay? So, I am agnostic to whatever level, you know, I'm agnostic to any of these numbers. It doesn't matter to me because I'm just going to play puts. Okay? So, it doesn't matter to me. As long as you don't go below 402, right? That's the lower end. That is the lower end. Okay? So, now, oops. Hold on a second. Okay. SPY futures. Basically, this is the whole month of January down here in the MACD. Don't worry about all this up here. Let's just focus on the MACD. This is the 1 hour chart, 1 hour MACD. See this? This is today, as of today, right here in the far right hand. What you can expect with the 1 hour MACD on the SPY futures or SPY is typically you have at least a 90% retracement from your starting point. So here's your starting point. Here's your ending point. Here's your starting point. Here's your ending point. See that? Starting point, ending point. Starting point, ending point. That's just how it usually works. And that's where we are as of today. So I put this X up here, and maybe it should even go a little bit lower. Okay? This is the natural progression of the MACD. That's just how things work. You know, especially when you had a day like FOMC. I mean, it just caused a huge surge up. And what goes up must come down. Okay? So that's why we saw that momentum loss today. It finally lost momentum, right? That's why on Twitter, you'll see it on Twitter on the tweets later on in the episode. It just couldn't gain it back, right? All afternoon, it just couldn't because it ran out of gas. It just ran out of gas, and there's nothing you can do to get that gas back except to just consolidate and retrace, give it back, regress to the mean. That's the only way you can get your energy back, right? It's not going to keep going up. It just can't do that. Not sustainable. Okay, so this is the first. Like I said, we're only right here. We need. I might be even be a little generous by putting that red X right there. It might need to go all the way down here. Okay, so I just wanted to show you guys this. This was my thinking intraday today. I was like, oh yeah, we got some more to go. It's not gonna rip to the upside on Monday and then make new highs. It's not gonna do that. So, okay, this is the past week. All right, this is today right here. See that? Look at the MACD. Falling, 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 falling. It's basically falling since yesterday's peak, right? I would submit to you guys that this today, right here in the MACD, is equivalent to something like this on January 30th. We're in the same spot. See that? We're almost at, this is SPY. Almost at the zero line, almost at the zero line. And what happened after that? Look right here. Okay? This is just natural progression. The 1 hour MACD is not just going to pivot real fast like that, like the 5 minute could. That's just not the way it works. It's just got to play itself out, right? That means it's got to go lower. It's got to go lower. It has to reset. It has to return, like you saw on SPY futures. It has to return with at least to a 90% retracement from its starting point. And its starting point is not here, it's here. Okay? This is the starting point. So the ending point needs to be somewhere near there, below the zero line, not above it. Okay? So that's what you guys should realistically expect to happen starting Monday. Okay? So, as you see here, and like I said, okay, here you had consolidation under this major channel. But the MACD positioning is totally 100% different. It's going up. It's just separating. See, this is not the same comparison as this. No, 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 no. This, you're at the tail end of a run. This is just beginning a run. Okay? That's why you could have bullish consolidation just under this channel, just under, boom. And this came under the channel, boom. Because you're at the beginning of the run. See that? Look at the MACD. So you already started this run up here. Boom, separation. Now you're above the zero line. Boom, even more separation. Oh, that's FOMC. That's why. Okay, that's FOMC. But the point is, you have bullish consolidation under major channel lines because you're at the early stages of the MACD ascending side. Okay. However, even here you have well, this is after FOMC. So this is the night after FOMC. You have, see that, consolidate under this midline channel, consolidate, and then boom. Okay, so you have there's 3 examples. 1, 2, 3 of bullish consolidation under major lines, and then you explode. But what happens when you lose momentum now? Now you're on the tail of the falling side of the MACD. In the morning, guess what? In the morning, you consolidated just under it, and then boom, right? You took off. Well, you came down, and then you took off again. But in the afternoon, you went back, you revisited this channel that you have previously bullish consolidated under, like right here, and even this morning, right? But now what happened in the afternoon? You revisited the same half channel right here, and you can no longer get lift. You can no longer do a bullish consolidation. It's now bearish. It's now resistance. See that? In fact, you're losing ground on it. You're not consolidating under it. You're falling lower. See that? You're floating lower. You're floating lower, floating lower. You are no longer consolidating under it like you did here, 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 and here. See that? You don't have the horse anymore. You don't have the horsepower. The MACD has to retrace. It has to just go back to the mean. Okay? So I hope that's pretty clear. All right? Yep, just like this. Just follow this trend. Sorry, it's just gonna have to follow it because it's a smooth line, right? It doesn't just pivot quickly. The only thing that can make it pivot quickly is the FOMC. Is like the right here, like boom, boom. Okay, but there's nothing left to make it pivot up. Okay, because you're going to see later in the tweet in the tweets that I'm going to show you right here. It's right here when I told you guys get out of your calls. It didn't have enough horsepower left. Okay. All right, next slide. SPY. Okay, here's the first thing. This is actually right here. This is FOMC, right? That's FOMC. This is the extended hours after FOMC on Wednesday. Look at these crazy wicks up, wick up, wick up, wick up, wick up, wick up, wick up. Okay, that's crazy power. Okay, so now you got that visual, right? Okay, so this is Wednesday. Now I'm going to show you today. Huge wick down. Okay. This is an extended hours tonight, guys. Huge wick down. Huge wick down. And then right in the last, what's this, 5-minute chart? Yeah. In the last 5 minutes at 7:59 p.m. Eastern Time, big red candle. I mean, it's not a ginormous. It's not like this, but it's big. This is a big red candle. Okay. So you saw the previous slide. Huge wick up, wick up, wick up, wick up for FOMC. And now you have huge wick down, huge wick down. That was tonight in extended hours. Okay. And on top of that, you have a big red sell volume right there with 5 minutes to go till close. Boom! Big sell. Okay. And on top of that, look where SPY closed in after hours at 7:59 p.m. Eastern Time. Down another 0.17%. 411.63 compared to 412.35 at close. Okay? That's what I mean, guys. For now, it must regress to the mean, and it is out of gas. You saw that slide earlier. I was like, how far above the mean and what it really went yesterday? That's crazy. It has to regress. That's just the way statistics works. Okay? So, let's talk about some broad strokes, shall we? This is intraday, 5-minute chart right here on the left. And on the right, it's basically the 1-hour chart. You kind of saw that earlier. That's where I showed you the 1 hour right here. It never even got back to the signal line in the afternoon. It tried to. It started to curl up, curl up, curl up. Oh no. But I'm not surprised because look at the RSI. 20.43. But for this past week, it was in the 90s. In the 90s. Okay? But in all afternoon, look at that. In extended hours, it just went even lower. 20.43. That is weak, weak, weak. Yeah, it's just out of gas. It's just out of gas. Okay? So, some broad strokes. So, this morning, huge green wick. That's probably what caused this pump. See that? But then, so this is my trading platform. Earlier, what you saw was Yahoo Finance, all those other wicks. That's an interesting observation that Yahoo Finance shows some wicks that don't show in my trading platform. See what I mean? So that's interesting. Okay. But in my trading platform, I do have a big red wick right here in extended hours tonight. Okay. So Yeah, we're gonna get some sell-off, guys. Okay. This is the dash, the red dashed line is the 1/2 channel line, and for all afternoon it was resistance. SPY failed to reclaim the half channel line all afternoon. It poked its head above it, but failed every single backtest. Poked its head, failed backtest. And then eventually it couldn't even poke its head up, and it was just getting rejected, wick down, wick down. See what I mean? Just lower and lower and lower and lower. It was losing strength. Okay? And in the morning, it got down to negative 0.73. And by the time the MACD bottomed in the afternoon, it was negative 0.78. That is bearish divergence, even though technically SPY made a higher low here compared to here, but the MACD made a lower low here compared to here, and that is a leading indicator that it's going lower, right? Because this whole week you've heard me talk about, oh, that's bullish divergence, where the MACD is making higher lows, where the price was making lower lows, like on a dip or something, right? But now it's the reverse. The MACD today made lower lows. Okay, it's now finally made lower lows. Bearish divergence, not bullish divergence. Okay, so that's what I want to show you there. Okay, now we're gonna get into the tweets. The tweets. This is basically the 5-minute chart today. Okay, so yeah, let's get into it. I tweeted this at 7 o'clock in the morning. It was a good hour and a half before opening bell. Tweeted, I'm astonished. Last night I was 51.49% inclined to get puts, but there's bullish divergence on the 5-minute MACD. Here, yes, it was bullish divergence on SPY futures this morning coming in. This was, by the way, before the payroll data came out, non-farm payrolls. Okay, so yes, see that price was going down, MACD going up. I was like, oh, that's interesting. I didn't expect that. Okay, we could be resuming the upside today. Well, we did for a while, right? We did for a while. Okay. All right, basically opening bell. Here we go. Here's the big green candle right here. That would have been equivalent to this guy right here. Yep, this one right here. Okay, I just said, I'm waiting. This could be a head fake. Patiently waiting for the next candle to form. Basically, yeah. Now you're getting up right here. Okay, I'm just waiting because I'm looking at the 5-minute EMA 50 red line right here. Okay, patiently waiting. Okay, so it kept on going up, and it hit this resistance band that I had drawn out, right in the AM episode pre-markets. That was basically the 1213 purple wick high, and I think this was like the 30-minute. Oh, it's right here. Well, the 1 hour SMA 20 or the 30-minute SMA 20. They were both right in these bands right here. You see these two gray lines? Yeah, that's the band. Okay, so it got rejected right there in that band, right there, right in this range. Got rejected, and then it got wedged in between the EMA 50. So this is the time where you're like, ooh, you just got to let this one play out. Okay. So, whoa, do you see that big red candle down? Well, yeah, it was this one. It was, it was this one, but it ended up getting pushed up. Okay. So, by the way, when you see something like that, you're like, whoa, that's bearish. But actually, it was bullish. Okay, it was bullish, not bearish, um, because it found support on the SMA 20 right here, right? It found support, so it just got rejected at this band. Boom, came down, found support, wicked up. Okay, so it even though it does feel, you know, bearish. So here's where I say, I suspect it's going to break through, but I'm waiting for confirmation. So here's, yeah, here it was right here. This is the one I was talking about. I said, I think it's going to break through. And what happened? Okay, it's teasing, but I still suspect bullish. 5-minute MACD almost crossing the zero line. Okay, so yeah, it was still forming this right here. So yeah, I still suspect bullish, consolidating under the EMA 50. You know, right here, wedged between the 30-minute EMA 50 and the channel trend line. What a trip! Yeah, here's the 30-minute EMA 50 right here, the red line and the channel trend line. I mean, you were wedged in between all kinds of important lines, right? EMA 50, the 30-minute EMA 50, the half channel trend line, the SMA 20, and then up here you got this band. Oh yeah, all kinds of good stuff. But look where my screenshot was at this time. Right here, right here. See this little green candle? Ooh, doesn't that look like a hangman candle, Mr. Ron Walker? Doesn't it look like a hangman candle right here? Yeah, but that turned into this big, huge green candle. Okay? And of course, yes, as soon as I saw this, I said, oh, I'm scaling long. That's what I said. That's it. That's it. Because I already saw the consolidation coming under here. Found support on the SMA 20 gray line right here. I was like, oh, that's it. That's it. I don't need any more confirmation. Okay? So I just had to tweet this. I said, man, market maker is using Apple and payroll fears against the bears, right? Apple sent the markets kind of down-ish last night in extended hours, and then payroll numbers, holy smacks. Did you guys see that? They almost doubled the previous payroll, non-farm payroll numbers. I was like, what? So so riddle me this, guys. You double the previous number, and you want to talk about having a recession? Really? See what I mean? Like, how does that work? That doesn't jive. Okay. So, anyways, back to this. Yeah. So this is just a great case in point. Don't buy into the news. I mean, we all knew Apple. I did an episode on that last night. And then we saw the payroll numbers come out. You can't draw any reliable conclusion that, oh, the payroll numbers is too high, therefore the Fed is going to keep hiking, and therefore the market should crash. But did it crash this morning? Nope. See what I mean? Don't allow these news to become some form of expectation as to how you should trade the day. That's why I don't read the news. I don't watch the news. Um, Someone might tweet something to me like, "Oh, did you hear this?" I'm like, "Oh no, I no." uh, I didn't hear any number. You know, I don't know about certain numbers that come out and whatever. So, okay, yeah, that's what I mean. Okay, so yeah, it was crazy separation. Yeah, with this big green candle right here, the MACD just, ooh, look at that separation, man. You can't, oh boy. Oh, that's bullish. That's ultra bullish. Okay, ultra bullish. Oh yeah, I had to put this in here. So in my morning AM session, this red dashed line, it's red dashed line now. In my morning session, no, it was blue because I got into a hurry. So at least I got the line there. But I later realized, holy smacks, this is a half channel line, not a blue. A blue line is the 1/8 channel, right? So it's a half divided by 2. which makes it a fourth, and divide that by 2 again, which makes it an eighth. Okay? Had I realized beforehand this morning that actually this was a half channel, ooh, I would have called that AM episode differently. I would have said, you guys, it's it's likely to consolidate like it did. See, it found support and then it ripped up. Yeah, see, that because this is a half channel. This is important. Remember, 9 times out of 10, or maybe even 99 times out of 100, it always goes under an important channel and then comes up from under it when it's bullish, when there's bullish consolidation, right? 99 times out of 100, it never bounces off of the dashed channel and it goes up. No, I never see that. I like never see that. You can count on the market maker taking it under and then coming back from underneath of it, right? Okay, so anyways, I was just acknowledging it like, oh man, I screwed up. But at least I got a line in there. It was just the wrong color. Okay, so that's all. As we were going along, oh, there's no MACD divergence I was seeing there, and that's correct. I mean, it wasn't diverging like right here compared to right there. That's what this tweet is all about. Okay, so far so good. Okay, so yeah, MM was being a butthead. It's going back up. Basically, it went down right here. It went down, and then it came back up. Okay, it went down to retest the EMA 50 right here. So I said, yeah, earlier my son was with me and my attention was kind of diverted. So be, here was that very slight bearish divergence right here. See that? It's right here. Here's kind of slightly going down. That's still going up. And what happened was because of that bearish divergence, it came down. Luckily, found EMA 50 and then it came back up. Okay. So luckily, it was a slight dip and it recovered. Okay. See this data point right here? Well, you can't see it now. It would have been equivalent to this candle right here. When I sent this tweet out, this was the moment. This was the moment the party was over. Today. I sent out this tweet right here. I said, scale out of calls, guys. Indicators starting to curl down. See that here, 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 here. Soon as I saw them start to curl, I said, oh, get out. MACD RSI curling down. Okay. And what happened after that? Uh-oh. So, um, fortunately, this point right here, had you gotten out, you're kind of near the top. See that? Just look straight over. That's not bad. That's not bad. Not bad at all. Okay? So, yeah. Okay, and that's when I said, I'm scaling into puts, guys. Channel, the channel trend line. Oh, that's this black line up here. The channel trend line now becomes resistance. MACD, RSI, both curling down. Yeah, see that? Curling down, curling down. Obviously, you can see that here too. Okay? But this black line right here is now resistance, evidenced by the wick down right there. Yeah, as soon as I saw that, I said, "Oh, I'm getting more puts." Okay. Yeah, as soon as you saw this big old candle, I was like, "Oh yeah, put city." A telltale sign that it's not strong. Why did it have to come back twice today to backtest the EMA 50? And I'm referring to once and then twice. You already took it back earlier in the day. You don't have to come back to the EMA 50. Here it was earlier in the day when we went long right there. Okay? Why did you have to come back here? and then here. That's a sign that you're not as strong. You're not strong anymore. Something's off. Okay. If you're strong, you will only have to backtest the EMA once that day. Once that day. All right. Okay. And here's where I'm basically starting, calling it. I'm like, can it come back from under the 1213 wick high? So it went below it right here, right here, right here. It went below it, and now I'm asking the question, can it consolidate underneath of it and then come back up? Yes or no? Or is it resistance? That's what I'm asking. Well, we know the answer to that. Wick down, down you go. See? No, you don't have any more bullish consolidation like you had on FOMC Wednesday. It's completely absent now. It's now strictly resistance, rejection with the wicks. Okay? Yeah, as soon as I saw that, I'm like, oh, we're going lower. Yeah. If it's resistance, then get more puts. Okay? Half channel support now. Okay, but I suspect we'll lose this too. Yeah, I suspect we're going to lose the half channel. The pullback is beginning. And did we lose it? Well, we were kind of doing some chop, 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 but then another big red candle. Okay, and then this one would have been another big red candle, but then it wicked up. Okay, so oh yeah, the MACD, the 1 hour MACD curled down and it never touched the signal line. What? Oh, yeah. Well, that'd be right here. I mentioned this earlier as well, but there you have it. The MACD starting to curl down and it never even touched the signal line, let alone cross the signal line. You'll hear me say that's a positive cross. What I mean is, oh, the MACD line, the red MACD line crossed the green signal line. That's a positive cross. Here, didn't even touch it, let alone cross it. Okay, so, yep, that's basically what that tweet was all about. Okay, here's another one, important one. Now consolidating over the channel line and the 30-minute EMA 50. That's both of these lines right here. When you consolidate over that line, it is bearish. Remember, consolidating under an important line is bullish. Consolidating over the line is bearish. Okay? And what happened after it was popping around on top of it for a while? You fell through it, didn't you? Yeah, you sure did. The sinkhole opened up and you went down right through it. Okay? Yep, there you go. Lost it. It was bearish consolidation. Loading up more puts. So I got even more puts when I saw that happening. Okay, so notice I'm waiting for confirmation to see things happen. Like, you lost it. Previously it was support, now it's resistance. Okay, that's what I look for before I get more puts. I'm like, did you lose it? Like, is it now resistance? If yes, I'm getting more puts. Okay. Oh yeah, this is what I mentioned earlier. The MACD made lower lows, negative 0.73 versus near negative 0.78. Remember that slide previously? So that's what this was all about. Lower lows, I'm like, ooh, that's not good. That's no longer bullish divergence. That's bearish divergence. Yeah, when it was right. It was right. Yeah, it was right here. Right here. See that slide? It didn't quite form yet, but see that right there? That's equivalent to right here. I said, it's going to fall, guys. Look closely at the circle. Yeah, look closely here. Now the SMA 20 is resistance. The channel and EMA 50, which was this line right here, that's old news now. The new news is now SMA 20 is resistance. Okay, previously the channel and EMA 50 was resistance. That's old news now. SMA 20 is now resistance. You are losing strength. Now it can't get past SMA 20. And in my previous episodes, I've said When that happens, you're in trouble. You're losing strength. And what happened after this tweet? See, at the time, it was just these little candles. What happened after that tweet? Boom, boom. See? So, yep. Just look out for this stuff, guys. It's important. So, yeah, it's wicking down. It's wicking down at channel resistance all afternoon. It's been resistance. It's going to fail the SMA 20. And my definition of rejected at SMA 20 means you fail the back test. Like this. You could poke your head through it, but you failed the back test. You can poke your head through it, but you failed the back test. You can poke your head through it, but you failed the back test. See what I mean? So that's what I say when you reject it at SMA 20. This gray line, that's the SMA 20 line right there. Poking your head through it doesn't count. It's only when you can back test it that counts. Okay? Okay, yeah. Here's another example. See the blue trend line that I drew? It's no longer here, but here's this is where the blue trend line was. It's making lower highs. Each successive bounce is weaker than the last. Now this latest attempt doesn't even touch the line. Okay? See that? Lower highs, lower highs, lower highs, lower. Yeah, it's getting weaker. It's not getting stronger. Okay? So, yep, SMA 20 is rejecting it. And this is the final tweet. B double asked me, so are we going to get rug pulled next week? Because he was feeling a little Ronish, Ron Walker. Finally, after a month of going up, Ron Walker might just be partially right that we're going to get a pullback. Okay? So, there you have it, guys. So, my answer to B double is yes. I don't know about rug pull, but we're going to get a pullback. Okay? It's coming. Please follow me on Twitter where I give real-time tweets intraday like I did today. It was pretty exciting. Had a bear trap in the morning and then a bull trap in the afternoon. Please don't forget to listen to your favorite music while you're trading. It matters, helps you get into the right state of mind and achieve your flow state. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 00. Whoa, signing off.